Jeremy Grantham doesn't believe in coincidences, at least not in financial markets. He says every crisis follows a pattern, and it's not a matter of if another collapse will come, but when. For Grantham, it's not just about the numbers on a screen. It's about the story the market has been trying to tell us for centuries, one of human behavior, greed, and inevitable collapse. He argues that if you want to know how crises happen, you have to study the rhythms of history and the psychology of crowds. However, in every circle, one thing is for sure. We always convince ourselves that it'll be different this time. Think of all the stock market crashes of the century. The 1929 crash that triggered the Great Depression did not just come out of nowhere. Leading up to it, the 1920s were a time of high hopes and great speculations. People bought stocks, on margin with borrowed money, convinced that the market's growth was unstoppable. But when the crash came, it was devastating, wiping out fortunes overnight and plunging millions of people into poverty. Fast forward to the late 1990s, and you'll find a similar story during the dot-com boom. At that time, the internet was revolutionizing the world, and the investors believed it would bring unlimited growth. Companies with zero profit or even viable business models saw their values skyrocketing. And then, in 2000, the bubble burst, taking with it trillions of dollars in wealth. Grantham describes these events not just as economic collapses, but as the inevitable outcomes of human behavior. He says history keeps repeating itself because we refuse to learn from it. Graham explains that at the heart of every financial crisis is a bubble. These bubbles don't just appear out of nowhere. They are formed when markets abandon reason and succumb to what he calls irrational exuberance. The prices of assets like stock, houses, or commodities soar far beyond their intrinsic value, and the investors get caught up in the euphoria and convince themselves that the rules of the game have changed. It's a classic case of groupthink, where the fear of losing out pushes people to make irrational decisions. The fact that this behavior is universal is both fascinating and terrifying to Grantham. He says that whether it's tulips in 17th century Holland or cryptocurrencies today, people keep forgetting that the market does not move in a straight line. You might ask the question, but why do these bubbles form in the first place? Well, according to Grantham, the answer lies in a combination of structural factors and human psychology. For example, low interest rates create an environment where borrowing is cheap and risk-taking is rewarded. Lax regulations also play a role in allowing speculative behavior to spread unchecked. But these are just conditions that enable a bubble. The real driving force is human emotion. Our tendency to chase what's popular and believe in stories that promise great riches is the actual problem. Grantham explains that during a bubble, optimism turns into euphoria, and caution is thrown to the wind. Investors see their neighbors making money and feel they have no other choice but to join in. This is a herd mentality, and it is incredibly dangerous. Grantham says the final stage of a bubble is called the blow-off top. This is the point where valuations reach absurd levels, yet the market keeps climbing high. It's a time of extreme greed, which is fueled by the belief that prices will only continue to go up. He notes that this is when investors start coming up with narratives to help justify the madness. This is when you begin to hear things like, "It's different this time." In Grantham's opinion, it's never different, because markets always revert to the mean. And when they eventually do, the fall is always swift and brutal. When the crash comes, it's like a domino effect. It usually starts with a small shock, like an interest rate hike, a geopolitical crisis, or a sudden loss of confidence. But once the selling begins, it spirals out of control. Panic sets in, and markets plunge as investors rush to cut their losses. Grantham compares it to a wildfire that starts with just a spark, but once it spreads, is nearly impossible to contain. The aftermath is always painful, with millions of people losing their jobs, their homes, or their savings. Despite the recurring nature of these crises, Grantham argues that they are not inevitable. They're a product of choices made by investors, policymakers, and institutions. He believes that better regulation and a deeper understanding of market psychology could help prevent the worst-case scenarios. But the thing with Graham is, he's also a realist. He admits that, as long as greed exists, there will always be bubbles. Looking at today's markets, Grantham sees troubling signs. He warns that we may be in the midst of another bubble. However, he says that this bubble is driven by years of low interest rates and unprecedented monetary stimulus. The prices of assets like stocks, real estate, and even art are at record highs. And yet, many of these valuations are detached from economic reality. Grantham is especially worried about speculative assets like cryptocurrencies, which he believes are the modern-day equivalent of tulip mania. He says that when people start investing in things they don't understand, it's a recipe for disaster. But it's not just the speculations that bother Grantham. He sees larger forces at play that might make the next crisis even more severe. One of his greatest concerns is climate change. As a longtime advocate for environmental sustainability, Grantham argues that the financial system isn't prepared for the economic disruptions that might be caused by a warming planet. Resource scarcity, most importantly, is another looming threat. Essential renewable energy technologies like metals such as lithium, cobalt, and copper are in short supply, and their prices are already through the roof. Grantham predicts that competition for these resources will lead to more market instability in the coming years. Another issue is population. In developed countries, the aging population is shrinking the workforce and slowing economic growth. Grantham explains that this creates a kind of economic drag, which makes it harder for economies to recover from downturns. When you combine this with the rising debt levels and persistent inflation, the risks become clearer. Grantham says the world is facing challenges we've never seen before, and our financial system isn't ready. So, what can we do to protect ourselves? Grantham's advice on this is quite straightforward. For individual investors, the key is to focus on quality. This means you should seek out companies with strong fundamentals, solid balance sheets, stable earnings, and sustainable business models. It is also important that you diversify because it spreads risks across different asset classes. But Graham warns that even the best investment strategy won't protect you from everything. He says sometimes the only winning move is not to play. Grantham also advises that policymakers should enforce stricter regulations so that excess speculation can be curbed. He has been sounding the alarm for urgent action on climate change, arguing that the transition to a sustainable economy is both an environmental and economic necessity. Grantham warns that the cost of inaction will be far greater than the cost of taking bold steps now. The central theme of Graham's warning is the importance of learning from history. He believes that though crises are inevitable, they don't have to be catastrophic. When we study the patterns of the past and understand the psychology of markets, we can curb the extent of the damages. He argues that markets are not just numbers and charts. They are a reflection of our hopes, fears, and our greed. And just as we have the capacity to create bubbles, we also have the capacity to learn from them. For Grantham, the future of markets and the world at large depends on our willingness to confront uncomfortable truths. Ultimately, as markets rise and fall, it's not just money at stake, but the lessons we choose to carry. And for Grantham, understanding those lessons isn't just a skill, it's a necessity. If you found this video helpful, don't forget to like, subscribe, and share it with someone who needs to hear this.